from non-profit organization. Problem number 5. The following is the receipts and payment account sports club for the year ended 31st March 2015. So our current year is 2014 to 15. This receipts and payment account is given. That is under receipts and payment account, there is a balance brought on subscriptions, donations, sale of refreshments, interest on fixed deposits, locker rent. And payments are general expenses, rent and rates, traveling expenses, postage, equipment, books, furniture, newspaper, refreshments, and balance carried on. It is closing balance of the cash. Okay. Next, if you come to other information, means it is adjustments. Under adjustments, subscriptions include rupees 700 of previous year and 1200 of forthcoming year. Means this is the 1200 is next year's subscriptions. Okay, this previous year means last year's subscriptions. So both of should be deducted from subscriptions. Next is subscriptions outstanding for current year. So outstanding subscription means the current year subscriptions income generated but not received the subscriptions, means it is outstanding subscriptions. We should be add to 1000 rupees to the subscriptions. This is the current year subscriptions only. Next, donations are to be capitalized as per the law. Okay, for subscriptions there is a first adjustment and a second adjustments. Okay, there is a two adjustments are there. Next, donations are to be capitalized as per the 3. Okay, third adjustment, donations you should be right under balance sheet assets, liability side. Next, the asset on 1st April 2014, club ground 25,000. Okay, club ground to 25,000 and equipment 15,000 and furniture 8,000. So it's a club ground, it is a tangible assets. Okay, it is a tangible fixed assets. So club ground, actually there is no new purchase of the club ground, and there is no sale of the club ground also. Hence we should be this is a club ground, we should be right under opening balance sheet under asset side and closing balance sheet asset side also with the same value. Next, equipment 15,000 rupees. Okay, equipment is a fourth adjustment. So there is a equipment purchase of equipment in this year. It is okay 8,400. Next, and furniture it is 8,000 rupees. Okay, furniture I think okay there is a purchase of furniture also is there. This is also fourth adjustments. And the asset on 31st March 2015, equipments 20,000. Equipments 20,000, that is fifth adjustment. Okay, write an adjustment number to equipment, fifth adjustments. Okay, like this while reading the question you should be okay, take it with a pencil, that's better in the examination. Okay, and if you come to the solutions, then balance brought down of the cash, there is a that should be right under balance sheet, opening balance sheet under asset side, cash account, that is 14,100. Next is subscriptions, it is the income, that is a subscriptions received amount by subscriptions. But under subscriptions, okay, under income and expenditure account, income side, the subscription amount we should be right. What is the amount of subscriptions? Okay, is in the year of 2015, but not received amount. Okay, there is a calculation of subscriptions. Calculation of subscriptions taken into income and expenditure account. So whatever the income generated, okay, whatever the income generated in the organization as an as a subscriptions, that is only the amount we should be computed. That is first of all subscriptions received, The subscriptions received amount is 38,500. To these subscriptions there is a first adjustment and the second adjustments are there. First adjustment is subscription include of 700 in the previous year. That is a previous year subscriptions should be deducted because of it is not a current year subscriptions. That is previous year subscriptions 700 minus it, that is 37,800. Next, forthcoming 1200 of forthcoming means it is next year, less next year subscriptions, that is 1200 rupees, that is also minus it, 36,600. Next means first adjustment can be completed. Next, second adjustment, subscriptions outstanding for current year, that is add outstanding subscriptions for current year, that is 1000 rupees, means that is related to current year only but not received, that is only outstanding subscriptions. Okay, in the income of 2015 only but not received the subscriptions. Now it is 37,600 is the subscriptions actually taken into income and expenditure account. Okay, these are only the subscriptions should be taken into income and expenditure account as an income. So 37,600 you should be credited to 37,600 credited to income side, okay, as a subscriptions. This is working note number 1. Here also working note number 1. Okay, next one. After subscriptions there is a donations 9,200. Donations 9,200. As per third adjustment, donations should be capitalized by law. Means simply the donations you should write under liability side. Donations, that is 9,200. Next, sale of refreshments, that is income by sale of refreshments, that is 12,400. Next, interest on fixed deposits, it is also income by interest on fixed deposit FDs, that is 7,800. Next, locker rent, it is also income by locker rent, 2,400. So maximum these are only the income side items. Next, come to payment side. Next, general expenses 6,200. It is a expenditure and there is no adjustment to this. To general expenses 6,200. Next, rent and rates. To rent and rates, there is no adjustment for rent and rates. The amount is 6,700. After rent and rate, traveling, there is also expenditure to traveling 5,900. Next, postage, it is also expenditure, postage 1,280. Next, equipment it is an asset, okay, that too maximum it is a fixed asset. Equipment, okay, under equipment actually it is a 5,400 8,400 amount it is paid. So there is a fourth adjustment and fifth adjustment. Fourth adjustment is it shows that opening value of the equipment, and fifth adjustment it shows the closing value of the equipment. Okay, so equipment closing value, it's directly it is given in the Okay, closing value or directly is given, that should be right under closing balance sheet. And the opening value of equipment also is given, directly you can write under opening balance sheet under asset side. But now you should be compute what is the equipment has to be utilized, that okay, that is calculation working note number 2, calculation of equipment, that is depreciation on equipment. You can write depreciation on equipment, that is opening value of equipment. The opening value of equipment is 15,000. And purchase of equipment, it's a made payment, that is the reason we can treat it as a purchase of equipment. Purchase of equipment is 8,400. The total amount is 15,000 plus 8,400, which is equal to 23,400. Okay, less closing value of equipment. The closing value of equipment is 20,000 rupees. 20,000. Closing value of equipment is 20,000. Now the difference value is 3,400, that is equipment depreciation on equipment. Depreciation on equipment 3,400, that is the 3,400. Now you can write debit side of income and expenditure account to depreciation on equipment, that is 3,400. Okay, next, after equipment it is a books. Okay, books is books actually it is an asset. Okay, newspaper is a expenditure. Okay, daily newspapers, like it is an expenditure, but it's clearly mentioned it is a books. Books is an asset. Books, that is 7,800. Next, furniture, the adjustment number is 4, that is the opening value of furniture. Opening value of furniture is given, and there is no closing value of the furniture, and there is no depreciation on furniture also. So write furniture, that is 9,400. Opening value is 8,000. Add purchase of furniture is 9,400, total 17,400. Okay, after furniture, newspaper is, it is an expenditure. To newspaper, is 1960. Next, refreshment, it is also an expenditure. To refreshments, 10,200. Next, balance carried on amount, it is closing balance of cash, that is closing balance sheet cash, 26,560. Like this you can enter each and every item into the in the books of accounts. Okay, then it is clear, don't miss out it. Okay, preparation working like this you can follow this method. And subscription include if you come to the adjustment, that is subscription includes 700 of previous year, 1200 of forthcoming year. So 700 of previous year, okay, it is outstanding one. Okay, it is a outstanding. So outstanding subscriptions, actually it is asset in the last year. So right under the opening balance sheet under asset side, so write subscription, outstanding subscriptions, outstanding subscriptions. Outstanding subscriptions is 700 rupees. Next, previous year and of 1200 of forthcoming year. Okay, forthcoming and next year subscriptions they are received. Okay, next year subscriptions also is received in current year. Okay, that is the liability for us. Okay, subscriptions received in advance, that is 1200 rupees, that is 1200 rupees. Next, subscriptions outstanding for current year. It is a current year balance sheet under asset side. Means current year outstanding, still it is not. Okay, so current year subscriptions, it is not, still it is not a received. That is outstanding subscriptions. Outstanding subscriptions, that is 1000 rupees. Next, donations are to be capitalized. Already it's completed. The asset of, okay, opening value of club ground, 25,000. So this is the same value of the club ground. We can write closing balance sheet asset side also, club ground, that is 25,000. Next, equipment in the opening value, that is 15,000, and opening value of furniture, it is 8,000. Already we are computed somewhat depreciation on equipment like that, and there is no depreciation on furniture. Okay, and the asset on 31st March 2015 equipment value is 20,000. You can write under closing balance sheet. Okay, closing balance sheet 2015 is a closing, so closing balance sheet. So now you can total the values, and first of all you can compute profits. Okay, either it is profit or loss, first we should be compute. The total of credit is 37,600 plus 12,400 plus 7,800 plus 2,400, total 60,200. So income side only is more comparing to expenditure side. So less 6,200 less 6,700 less 5,900 less 1,280 less 3,400 less 1,960 less 10,200. The difference is 24,560. 560 is a surplus. This is the excess of income over expenditure. Okay, means income is more than expenditure. Next, this is the same surplus you can add to opening capital fund. Okay, in this closing balance sheet there is no opening balance of uh, capital fund, it is not available. That is the opening balance of capital fund, you should be compute from opening balance sheet. Okay, you can total the values. Asset side 14,100 plus 700 plus 25,000 plus 15,000 plus 8,000. which is equal to 62,800. 62,800. So capital fund 62,800. It is a balancing figure amount. Okay, this is the opening balance sheet capital fund. If you come to the next year, it is opening capital fund. Opening capital fund, it is 62,800. Add surplus, that is already we just now we computed now 24,560, which is equal to 24,560. 87,360. Okay, now you can total the liabilities and assets also. 87,360 plus 1200 plus 9,200, which is equal to 97,760. Okay, total assets also 20,000 plus 7,800 plus 17,400 plus 26,560 plus 1,000 plus 25,000, which is equal to 97,760. Okay, like this you can solve the question without any mistakes. And if you require any solutions, and if you have any doubts, and if you require any this material as in PDF format, please be contact 741 68 62278. Okay, and comment and share also, share this video to your friends. Thank you.